Trading as a profession or a side hustle requires steady attention to detail. Instability is a fundamental fixing in this field. The greater the price fluctuations, the better. All risk. That approach could be a prerequisite for passage to trading, which implies you must be prepared for gain and losses. If you want to build a lot of money, then this channel is for you. Before we continue, please take a moment. Go down and smash the like button and subscribe to connect with us. It is broadly known that success is determined by the knowledge you have in the financial markets. We live in an activity-driven culture of traders that share a common belief that more exchanging activity for expanding amounts of cash is better. In reality, quite the opposite is true. Less is more in the words of Forex legend Bill Lipschultz. If most traders would learn to sit on their hands 50s of the time, they would make a lot more money. Instead, amateur traders continue to barrel ahead, plowing, expanding amounts of cash into each exchange that they make. From a psychological perspective, the crave to trade is born from a desire to produce lots of cash in double quick time. Instead of risking scarce assets, trading masters like Timothy Sykes are staunch proponents of paper trading, as its namesake recommends paper trading, as they create an exchange gene under real-world conditions. In other words, you're making the same exchanges without gambling a cent of your bankroll. So what is paper trade? On paper, trade is a recreated trade that permits investors to hone buying and selling without risking real cash. The term dates back to when before expanding online trading platforms. Aspiring traders would hone on paper before risking cash in live markets, whereas learning a paper trader records all exchanges by hand to keep track of speculative, parading positions, portfolios, and benefits or losses. Most practice exchanging includes using electronic stock market simulator, which looks and feels like a real exchanging platform. There is another type of trading which is known as live trading. Let's see what it is. Live trading is when somebody records their screens and exchanging platforms, and after that, they click to purchase or exit the trades. They're pretty much just trading live before an audience, or they're trading live and recording their screen, whereas doing so. If you ask me the benefits of this kind of live trading, it's more of understanding the person's thought process. Like when he's about to purchase, he'll share why he is looking to purchase. Now, possibly there are certain factors or things that he's looking at that lead him to purchase. Once he purchases, maybe he's looking to oversee the exchange and he'll share his thought process on how he's looking to exit his vectors. And if the market goes against him, he will cut loss and stuff like that. I hope you understood better now about the two trading types. So we're moving towards the key differences between paper trading and live trading. But before moving ahead, don't forget to subscribe to Upstep Financial to stay in the loop with our unique videos, and if we missed something important so far, comment us below. Keep watching. In paper trading, no money is involved. The transaction is done based on imaginary money. It means that I can afford to make mistakes in my trading practice using the trading system since no money is involved. Some brokerage companies do provide an account that allows both paper trading and live trading. The advantage of such an account is that it will enable a realistic simulation of the livestock market. The share prices of all stocks are accurate, but the transactions are false. For example, I could set up my account with an imaginary amount of $10,000. Then, I will practice how to filter and select the appropriate stock to invest in based on the trading system. Next, I will choose at what cost to buy the stock. For example, I intend to invest in the stock market at $13. I need the key and the purchase order and hold up for the share costs to hit $12. If the share cost hits $12, my account will record that I have bought the share. Next, I have to decide when to sell my shares based on the trading system. Let's say I decide to sell at $50. I will keep my sell order and wait for the stock to reach the price of $50 in the livestock market before my sell order is considered to be successful. After a period of practice, I will learn from my mistakes and improve my trading skills. Learning from mistakes is the key to success based on my understanding of the Rich Dad series by Robert Kiyosaki. After 3 to 6 months of practice, I will be able to make consistent profits. Then it is time for me to enter the real market. This brings me to the second main difference between paper trading and live trading, which is emotions. When I exchange with real cash, there's a fear of losing cash if the share cost goes down. As a result, I will be hesitant to sell my offers if I am losing cash. I may keep on holding to the offers, even though the exchanging system tells me to sell. The share costs may go down further. In the end, I will end up losing more cash when the share cost goes up. I will end up not offering, even though the exchanging system tells me to do so. The share cost may turn around and goes down. Rather than making cash, I will end up losing cash. The management of your emotions is the key to failure at a stock venture. The third main difference between paper trading and live trading is the risk of addiction. When I am trading real money in the live market, I always want to keep track of the share price. After keeping the buy order, I will have the desire to keep checking every other minute whether I have successfully bought the shares. If my buy order is successfully executed, I will have the desire to keep checking whether the share price has gone up. If the share price goes up, I will feel excited and happy. If the share price goes down, I will feel depressed and sad. This is like an alcoholic addict who drinks to feel high. The difference is the next day, he will receive the hangover. The next difference between paper trading and live trading is that it allows me to gain real experience. Real-life experience is the critical component of success. We can learn all the theories about investment. We may even paper trade investment, but if we never do the real things, we will never master the investment skills. Paper trading platforms permit beginner traders to memorize the ropes of exchanging safely and enable progress traders to undertake new strategies. Additionally, there are many free simulators. The most excellent paper trading platforms typically require you to pay for data or open a brokerage account. Ultimately, it's fundamental to search for a simulator that gives the particular tools you wish to make strides in your exchanging strategy. Furthermore, in live trading, you experience quick feedback, learn about organizing, and learn from different people with different experience levels. Live trading can assist you in bridging that experience by permitting you to learn on the spot from the industry's best, sparing you a ton of time and possible losses. One of the main reasons that so many traders struggle is reasonable role models and proficient mentors to guide them properly. It empowers you the opportunity to witness the enthusiastic roller coaster trading can be using the exclusive exchanging patterns and interesting formula can assist you by giving you a trading edge, whereas checking your capacity to use the information we teach effectively. All right, guys, choose wisely. Choose one that meets your needs at best. Please share it with your friends or anyone else who might benefit from this information before wrapping up to make sure you leave a thumbs up and subscribe to our channel. If you want to change your future, take action.